massive hello to everybody. So guys, I hope everybody's having a great weekend. This is 50 pips rocking and rolling here on the 11th of January 2015. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take, and the fact that you're listening to this means you read, you understand, you accept all disclosure disclaimers on the website, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's shaping up for the week? Again, not an uber busy week on the data front. It's a bank holiday in Japan on Monday. Not an awful lot of data flow. First things is we're going to start on Tuesday. We've got trade balance out of China. We got some minor data out of the UK, Europe, and but we have the CPI out of the UK. Then we got some stuff. We got the jobs opening out of the US, but basically fairly calm until Wednesday when we've got basically that European Court of Justice ruling, which could be a mover. We've got retail sales out of the US, so that's going to be interesting. And then Thursday we've got some unemployment data out of Australia. Interesting because we're starting to see maybe potential shift in terms of the tides on Aussie dollar and Kiwi dollar. Then we got the PPI's unemployment claims with Philly Fed out of the US, and then that takes us into Friday trade, which sees the CPIs out of the US and the University of Michigan data. So again, not an awfully busy week. Again, really the focus, at least in terms of FX, is in terms of euros all on the ECB meeting on next Thursday on the 22nd, and then the Greek election. So we'll have to see how that plays out. So I'm going to try and focus a bit more on Forex because last time we didn't do an awful lot of Forex pairs. So I got a lot of people saying, hey, why don't you do more Forex? So we'll do some more Forex pairs. Just as to starters, let's look at the ES as always. ES is still stuck in that trading range we discussed, 2075s, 2000, beautiful little action around that thing. So what we were looking for going into the year, we're looking for holds below that 2075. So failure to get traction above that 2075 after we broke back below it to give us a test of that 2000 level, which we got. And then we said really it's all a range play. Failure to hold below, then there's very high chance that we're just going to revert back into mid-range or try and take a stab back higher, right? So it played out quite nicely. We got that move into the 2000, got some choppy action around there, then moved back, and we're just hovering around the 2050s here. I mean, even if you look at it on a shorter time frame, something like the 1 hour, very nice trading action even during the day, like on Friday. We came into this range, and what we were looking for was break above and hold above to give us a 2075 test right here in this tight range as it was hovering around the 2050s, break below and hold below to give us a 2025 test, and that's in play, so that's what we would be expecting going into the week. But again, broadly speaking, a lot of chop around this area. It looks like, again, we've been saying this for a while, that selective opportunities to sell for moves back lower to see a decent 5-10% correction would be the healthy move. It doesn't have to happen, but that would be the healthy move. So that's still what we're looking for. So again, going into the week here, the broader range is still going to be 2075, so in the 2000. Look for failures to get back above the 2050s quick and to attract new buyers above that quick. Look for the 2025s and 2000 level to be tested again. Let's see what happens. Could be an interesting week. And the other thing on gold, by the way, I'm not going to review crude. There's no big point on crude. Crude is basing into that support, and as we said, usually basing processes in crude take some time. It can take 1 to 2 to 3 months, so just need to be patient there, see what happens in all that support. Gold, we talked about that 1200 level, and we said we could equally build a case for shorts or longs. It's still very, very choppy. What we've been favoring since that failure to hold the 1150 is our views being that we're going to need to go back up and test the 1250 level, and it looks like that's in play. It's been chopping around a lot, but especially if it holds this break above this descending trend line, we'd expect this to continue to try and get momentum and take a stab back at the 1250 level. So that's pretty much where we stand on gold. Looking at some of the pairs. So one thing I don't usually look at, but I just got inundated by emails asking me about this, and I don't really look at it, but I'm just going to cover it quickly. AUD and ZD. So basically everybody's, I don't know why, I don't follow this pair a lot, but everybody's saying, is it time to short? Is it time to get short? Again, people who follow my blog or know me, tend to be more of a contrarian. So clearly the short is not the play I would be looking at personally. So I think a lot of people are just looking at the fact that it's holding heavy into these lows, and this is a level that hasn't been tested or hasn't been broken rather for a really long time. As usual, I think it doesn't play to get aggressively short in front of a brick wall. I'd rather wait for the brick wall to break and for action to hold below that brick wall to get short and short retests of it, just following normal retracements, playing into support or resistance. So if anything here, I think we've moved back into a very, very interesting support zone. You see here markets taking a very aggressive move down. On the retrace, it's come back up, and now it's moving back down, and it's finding support at this key area. So right here, as long as this holds, chances are we'll see some kind of a decent bounce here. What I would expect is at least something like to the 50 back of this most recent move down. So I would not be surprised to see a move back all the way into the 108, right? And especially as long as we hold back above that 108, then I think it could get, from a swing perspective, it could get a lot more momentum. We'll have to see how that plays out. But right now, I think really the fight's going to be on between this 108 on any retrace back up and those lows. And again, it could be choppy for a while, but again, it looks like Australian dollars catching a bit of a bid. Again, I really don't like this pair, but just to answer those questions, if you're looking for shorts, I'd rather see weekly closes below the 102.80s than to short inside a brick wall. Okay, so I hope that answers most of the questions that were asked on that. Now, in terms of Aussie, since we're talking about Aussie, I posted this chart on the blog. We've been looking for this to base for quite some time now, moving into these lows. So what we're saying, this is a monthly chart, right? And what we said is, since we started to enter this whole phase, right, a lot of people are getting very, very aggressively bearish. And again, keep in mind, these are big levels because we're looking at it from on a monthly perspective. But what we were saying is, again, you had some very nice moves here, even retracements, chances to short and break down. But the only thing we're saying is, once, there are chances to short here, there's chances to short these retraces, but we were not really interested in trying to get super aggressively short on the break of these 84s, right? Because what we were looking at, okay, you don't want to get to the party where the punch bowl is empty. And in terms of the broader move, if anything here, we were looking for tactical opportunities for this to base, especially because we're just respecting the chart, and we see that there have been buyers supporting this in the past. This was a key level. Furthermore, if you look at the 79.60, this level, key support, key resistance, key resistance, key resistance, key resistance. And when we've broken through here, we've also got very aggressive action through this area. So the only thing we're saying is look for some kind of opportunity to place some kind of a bounce here. You clearly don't want to get long at trying to catch a falling knife, but you want to look for opportunities to bounce, right? And again, if this monthly closes positive, again, it's very early to talk about a monthly, but just I'm talking about this because we posted the chart. This could be a nice bullish sign, or at least for a healthy reversal, right? So if you look at it on the 4-hour chart, which I believe is on the blog here, the move we were looking for is pretty much done into those 82s, right? And the point being that we came back down into these lows, descending trend line, pressure on, we came back up, and failure to attract new sellers at lows, with putting in a possible double bottom here. And what we said is look for this to reverse back up into this trend line for starters, and then see if we can coil here for a break above. So you see here what happens. We put in this double bottom, we move back into this trend line, right? And instead of the market smashing it back down, hardcore selling coming in, bam, it bases, right? And you see here, if you look at it on 1 hour or 4-hour chart, it's very clear. You see all these 4-hour candles forming with all these wicks here, basically market supporting, unable to attract new selling here. So we said, again, watch this. The breakout in terms of the next Momo outside of this range will probably give us clues. If we end up closing back below here, 4-hour closes below this range, then very high odds we're going to come back and test these lows. If we get 4-hour closes back above, then very high odds we're going to test those 82s back into these highs, and that's pretty much what played out. So a very nice little retracement here. Now, what I would be saying here is just look at the way this is shaping up. If you look at something like the daily and you put 100 and 200 moving average on it, you can see that this could easily retrace even all the way back up into the 87s, 88, 90s range and still hold a bearish trend, right? So keep in mind there's a lot of cluster of support or resistance here, around these highs, around the 88 high 88s, 89s, and you've got these lows coming here at the 85. So clearly, especially if this breaks this high early, these 82s gets momentum above this early in the week, you know, don't be surprised to see it making a fairly quick run back into the 85s. Okay, so that's what's going on Aussie. Kiwi, let's look at Kiwi. Kiwi's did AUDNZD. Let's do Kiwi. Kiwi, similar thing, right? What we're looking at here, and we've been more bullish Kiwi than Aussie for a while. And it just looked like it was holding much nicer structure, much nicer support, right? And what we kept on saying is look for this to move back above the descending trend line. This descending trend line that's tried to keep pressure on for oh so long. And if we get the first signals, especially once it starts holding above, then it's going to confirm our view that this was a bottom place. You know, some people will be talking about reverse head and shoulders or whatever, shampoo bottles. We're not big fans of those. But anyways, what's happening here, we put in a bottom here, looking for this, closes above here to get momentum, and bam, try to move all the way back into those 79s, 80s. That's so that's in play, and this is going to be the next pivotal level. I mean, if you look at it from a daily perspective, you can see why this whole zone is so important, right? Because this is where all the sellers tried to keep pressure back on. So again, these are the two pivotal zones. We expect things could be very, very choppy inside this range, so 80 and 76s. This descending trend line is the pivotal area. So momentum above, then we'd expect this to try and continue its move back into that 80, slapped back below, then we'd see some pressure on. But you know, we're still favoring the point that it's going, you know, for a number of reasons, for it to that it's try to call back up, and we see some profit taking, shorts taking profits on these big moves that have taken place to the downside, both on Aussie and on Kiwi. And I would expect the market to try and take out Friday highs at the open later on today. You know, same thing on Euro and cable. I'll expect those to try and gap up, and you know, a usual classical action, I'd expect, you know, that yen, USD JPY, Euro JPY to try and gap down, cause a bit of pain to the downside. Actually, while we're talking about yen, let's look at Euro JPY. What we talked about here on Euro JPY is we talked about this being a key level, a very big structural zone, right? So what we have here is we have the confluence of this recent resistance that should be acting as support. We've got this recent move up, the 50 back 61.8 of this recent move up, and we have the two moving averages on the daily, the 100 and the 200. So this is all a huge cluster of support. So we said, watch this. This is going to be a very, very important level to watch. Now, again, we closed 40-30s. Classical action would be to see this try to gap down into the open tonight. Watch this level, not particularly for, you know, we're not particularly looking for trades here, but what we're saying here, going into the week, if this holds below the 140 quick, don't be surprised to see this retracing all the way back to the 137s. If it catches a bid, then don't be surprised to see this moving back into the 141. Basically, this can move very, very, very quick, right? You know, be careful on all the yen pairs, because they can move extremely quick. I think there's a lot of nicer opportunities where you can trade with tighter stops, you know, across the board without necessarily expressing those views through yen, or on those yen pairs, you probably have to trade much, much wider, right? So what else have we got? We got Euro and cable. That's what we haven't done. So let's look at Euro and cable. So cable, we posted this chart on the weekly, and we said, again, you know, be careful when everybody's only looking for one thing to happen, right? Markets can remain irrational longer than you can stay solvent, but markets do tend to overshoot and do tend to revert, right? So and show some kind of a healthy action. So as we started pressing lower, again, the two biggest questions, rather, not a lot of people commenting on Euro, but getting a lot of questions on AUDNZD and cable. You know, everybody's saying, you know, cables are going to hit 148, is going to hit 146. Yeah, of course it can, but the only thing I wanted to show with this chart I posted on the blog is just be careful. There is a lot of multi-confluence support zones as we're coming back down into this area, right? Into this area, you know, starting from the 150 30s, 149 80s, 149 20s, etc. Now, a lot of support, and here it's bouncing pretty much to the pip here. Again, so I just want to make it clear to everybody that this could easily pop all the way back up into the 161 level, right? And then get sold off hard for that move into the 146s, 148s, whatever, right? And that would still be a healthy market dynamic, okay? Now, personally, I tend to favor the view that, you know, I'm not looking that far forward, but again, I think it would be healthy to see some kind of a bounce, and I'm looking for this to try to move back up, ideally, you know, quickly back into this whole 156, 158 range. And so we'll have to see how this plays. Again, you know, it's all a question of rates, etc. What's going on? We've got elections in the UK, so it could be a very, very volatile ride on sterling in general. But here, again, we'd favor the option that it's looking to form some kind of base here, and that the next bigger structural move, or the next bigger move, will be to the upside rather than the downside. Okay. And that's pretty much the same thing as is going on euro, right? We talked about the fact that it was moving back down here, and that it was a massive support zone, right? That clearly we had there was a chance that this would accelerate back into the 116s, but as far as we're concerned, the more it was accelerating lower without any kind of retracement, the higher the chances for a retracement would be. Now, again, it's all going to be about the ECB. A lot of people asking me about, you know, what's going on, 500 billion, 1 trillion, whatever. At this point, you guys know I'm not a huge fan of talking about fundamentals, but as I've been saying for a while, I still believe that, especially with what is being said, with what's going on with the price of euro falling aggressively, what's going on with the price of crude, and with the recent move in general, it's going to be very, very difficult for the ECB or Super Mario to pull something out of the hat which is going to impress the markets. So I think there's a higher chance for it just meeting expectations or disappointing. So in any case, I think that the healthy move as we move towards the ECB would be to see the shorts taking some profits. Now, whether the ECB, going into the ECB, that's going to mark the if this retraces the top of the retrace, we'll have to wait and see. There's still some time to go. Again, as you guys know, a lot more people talking about this. We've been talking about this for years, 4 or 5 years, since we started the blog or on Twitter. You know, usually we have what we call the January effect on euro, and a lot of people are looking for euro to find some kinds of a higher low for the year in January. The only thing I'd like to say is, again, it's the same thing with sell in May and go away, or January effect, or whatever you want. It doesn't mean because it tends to put in a high in January, for a higher low in January for the year, it has to put in that higher low the first 2 days of January, right? It's not because sell in May and go away that you have to sell the 1st of May, all this stuff, right? So always keep the context in mind. And these are always things that are much easier. And again, I'm going to be a bit boring here because I know people like to get excited with this stuff. But all these things are much easier to see once they've happened, right? Everybody's a genius once the top is formed or once the bottom is formed. But a lot more people get into real trouble trying to catch that top or bottom, right? So I just still say trade your charts, trade your setups, stick to your rules, and then you can use that in the background to make decisions, to fine tune, but don't base that, you know, don't look for a lottery ticket all the time. You know, it's not a strategy to build a successful career by looking for lottery tickets, right? So again, we're looking for this to form some kind of base and start to retrace a bit into that ECB meeting. And if you look at it also from on a tighter time frame, you know, very nice action. You know, again, we're testing all these new levels that haven't been tested for a long time. We started January, we started again with a move aggressively lower. We had that gap down, bam, we put in that low at 1850s, right? And this is the big pivotal zone, and you see that we hovered here, we tried to press below, but we couldn't get any traction. Then bam, that's when the next leg started. We pressed below, and previous support, let's do it this way to make it super clear, previous support acting as resistance, right? So you see previous support acting as resistance, and as long as this previous support can act as resistance, then euro has a good chance of trying to go back down and break the most recent low, the 1750s, and cause more damage to the downside. But everything here is pointing to, bam, protection of the round number. Very, very strong protection of the round number. Move back higher, smack down, trying to take it out, and again, protection once again of that level with higher lows. So finding buyers at lows, unable to break lower, and moving right back up. So right here, as it's trading the 1850, it closed 1840. I'm not going to use surprise because I don't like using surprise. Let me rephrase that. I think there are very high odds that the market is going to try and gap up or at least print back above the 1850s. And what I would look for going into the week is a hold above 1850 early for the market to try and move all the way back up and close that gap and move back into the 120 level. Failure to hold above 1850 early on Monday, then I would expect it to try and test the downside, but keep in mind that it can still continue to make a whole series of higher lows and still coil back up. So again, I think it would be healthy to see this correct a bit. 1820's first target, looking for there. Then this is still very heavy. This is the high from January that everybody's, a lot of people saying that's the high for the year. I think it would almost be, I tend to always have a feeling it'd be too easy, right? If that was the high of the year and then everybody finishes the year thinking die, euro, die, go lower, it opens down, and then it just feels it'd be too easy. It feels it needs to cause a lot more pain than that. So at least looking for this to try and rotate back into the 120s, and then keep in mind that this whole zone is going to be a very interesting support zone, so resistance zone. So I think to see a much stronger correction in terms of shorts covering, we need to see above the 121s, right? Unless we see above the 121s, this could easily stay offered hard. If you move back into the daily or something, you know, you'll see there's a lot of other areas we talked about. The next big zone will be into the 124s, 125s, tying in with this base right here, right? That previous support that once we broke, continue to hold the downside. That'll be the next level to watch. But this is what I would be focused. This is what I would be focused on going into the week here. But again, reminder, a lot of it is about what happens on the 22nd. There's still going to be a lot of positioning and squaring. Keep in mind, markets can remain irrational longer than you can stay solvent, but over time, we always favor healthy moves, healthy market dynamics. And again, I would strongly recommend, whether it's with yen, whether it's with CHF, whether it's with euro, to not be so obsessed, or whether it's about euro NZD, not to be so obsessed about catching big winners, about running after lottery tickets. If you want to do this for a living day in, day out, focus on the solid moves, focus on making some every day, focus on hitting your setups, respecting your rules, not on chasing lottery tickets. Okay, so I hope everybody enjoyed the update. Tried to make it a bit longer this time, tried to talk a bit about more Forex. More than welcome, send me some note on the blog, let me know what you want me to talk about. We'll try and look at that in the next update. Have an awesome one. Thanks for listening. See you guys on Twitter. Bye bye, guys.